The 2019 tax income filing and payment deadline has been extended from April 15th until July 15th, which is just around the corner. So if you're coming back from the 4th of July holiday weekend, happy birthday, America, and you haven't done your taxes yet, you better get on it. Here are my favorite tax deductions and tax credits. Let's get to work. To be clear, I was a financial advisor for over 8 years, so I do know a thing or two when it comes to people's personal tax returns. But I am not a certified public accountant, and I would strongly encourage you to do your own research or do as I have done and consult and hire a professional CPA. If you're filing a personal 1040 tax return, here are my favorite tax deductions and tax credits. Student loan interest deduction. In 2019, if your modified adjusted gross income for married filing jointly was $140,000 or less, or if your MAGI was $70,000 or less if you were single, then you could deduct all the way up to $2,500 worth of interest that you paid. Now, if you were married filing jointly and you made more than $170,000, or if you were single and made more than $85,000, sorry, you're completely phased out of this $2,500 deduction. Unlike the student loan interest deduction, the American Opportunity Tax Credit is a tax credit. This is up to $2,500 of a tax credit for each eligible student. For married filing jointly, this is for incomes up to $160,000, and it's phased out and you are ineligible anything above $180,000. For single, your MAGI numbers would be between $80,000 and $90,000 respectively. Now, if this tax credit brings your tax liability down to $0, make sure that your expectations are set accordingly, because you will only be eligible to get up to 40% of the remaining tax credit owed to you, up to a maximum of $1,000. If you're somebody like a realtor, hair salon owner, financial advisor, and you have an S-Corp, I got a good one for you coming up. Hang tight. The child tax credit is pretty common, and most parents know about that one. But if your tax preparer didn't ask you, if you're a parent, about your child care expenses, then you really need to wonder, are you working with a tax preparer or a CPA professional that is providing you guidance? This is the Child and Dependent Care Tax Credit table straight from the 2019 IRS 1040 tax return. I'll leave this on the screen for a minute, because if you made more than $43,000, then you are capped at 20% of this tax credit. So it's a $3,000 tax credit. 20% of that would be $600. You're capped at a maximum of $6,000 of this tax credit. So for two dependents, the maximum credit you could get if you made more than $43,000 is $1,200. Of course, one of my favorite deductions would be a qualified retirement account contribution. I'm not going to go into it on this video. I'll leave a link right here. I made a 2-part video series about different retirement accounts: SEPs, Simples, 401ks, IRAs, 457 plans. A lot of good material in there. I'll leave a link in the description down below as well. Hey man, dude, what are you doing? I'm in the middle of a thing. Yeah, I know. But you mentioned taxes, and I think we should ask Dee if she even knows the difference between a tax deduction and a tax credit. No way she knows. I mean, I'd like her to know, but yeah, I doubt it. She falls asleep after 3 minutes when we go over the budget. Okay, I'll ask her. Go away. Go for a run or something. You know we run every morning at 5:30. Hey, Dee, what's the difference between a tax deduction and a tax credit?
Not a clue, babe.
We're a good team. Okay, health savings accounts, another one of my favorites. This is a $3,500 tax deduction or a $7,000 tax deduction if you're married filing jointly. You basically get a tax deduction against your gross income, and you could use this money basically tax-free as long as you use it on a qualified medical expense. Okay, QBI, Qualified Business Income Deduction. If you are a sole proprietor, business owner, or you have an S-Corp, make sure that you ask your CPA professional about your QBI. I'm not even going to get into this one. There are so many complexities. This is an example of how it's best used in the hands of an expert and a professional like a CPA. Just ask them about it and they'll walk you through it. Also for business owners, getting creative here, minimal rental use. Did you know that you could rent out your residential home to your S corporation or to your separate entity business that you own, and as long as you rent it for 14 days or less in the calendar year, you won't have to claim that rental income on your personal tax return? If you are a sole proprietor or S-Corp business owner, I don't know, maybe you're a financial advisor or a real estate agent, or maybe you own a hair salon and you constantly have team meetings at your home, or maybe you have team dinners at your home, you probably do a good job of holding on to those receipts for the cost of catering or for the cost of food that you serve your team. And good job to you for holding on to those receipts and tracking and documenting your expenses. But did you know you could take it a step further and your S corporation can basically rent out your home from you? And as long as you do this 14 times or less in the calendar year, it's a deduction for your S corporation, and it doesn't have to be claimed as income, like I said, as long as it's minimal use. So consult with your CPA professional to make sure you play by the IRS rules correctly. Maybe it's 500 times every 500 times? No, $500 every time you rent this out, or maybe $1,000 every time you rent it out. Consult with your CPA professional to make sure you do it correctly. Smash the like button and hit subscribe if you like videos like this. If you're interested in learning more about retirement accounts, click this video right here. Otherwise, you might like this video instead. Thanks for watching. I appreciate your time. D, come on. Haven't you learned anything from me?